Good morning, everyone. Welcome to Before the Bell with Podia Capital, Steve, and myself. Guys, I hope everyone had a pretty beautiful, sunny weekend. And yeah, a big thanks for tuning in. Steve, how are you, my friend?
Stunning. It was good, but it wasn't stunning, Henry. Oh my goodness, no. But yeah, it was good, my friends. Got some rest. Ready for the week, Henry. Looks like today, yeah, we don't have too many news coming up, but there's always things to talk about, even when it's on the lighter front. How to prepare ourselves, guys, because we always have these surprise headlines coming in as well, so we can talk about that. Some strategies, some risk management, how to secure our prop firms. There's always things to talk about, my friends. And as we're talking as well, we could always update you guys if any headlines come in. Yeah, we are having some intervention on the Japanese yen. That's like the main headline I'm always seeing. What do you see on your end, Henry, with the Japanese yen? Because I'm always seeing the intervention that keeps coming in week after week.
Yeah, I mean the US are afraid that Japan gonna uh, gonna throw all their bones on them and
Yeah,
then just crash the bonds market. That's basically the major game there, right? So
yeah,
it's much cheaper for them to intervene with a couple of bow instead of a possible collapse of the bond market. And don't underestimate the carry trade, right? So if the carry trade also starts to unwind, like one of the biggest trades in history, up so far, if it starts to unwind, it can cause all kind of troubles inside the markets. So therefore, those guys are watching those things really close.
yeah, perfect. And this is why I always ask Henry, guys, because I know he always has some deep knowledge into this. He's been in the game a long time. This is why he's here. Ask him any questions. But of course, no financial advice, no investment question, you guys. Anything when you want to dig a little deeper into a topic. Yeah, there you go. There you go.
No, yeah, and guys, we always encourage you, right, to ask questions. Hit us up if you have some personal questions on your trading. You can reach out to Steve or to myself on X or any other platform and ask us. Otherwise, if it's general trading questions, just write a comment down below, and we're always happy to answer these. Yeah, let's go. I mean, guys, Friday been obviously a big day, NFP, and actually, Steve, I think it might be later we could go back in time and play NFP through, right? How the year's opened, I think it might be because today it's a more of a quiet day.
Yeah.
Markets are basically still range bound, so we
It's
could
quiet
have a
for now,
chance.
Henry. You never know.
Yeah,
Anything
you
could
never know.
happen.
You know, it's just
We
a
could
matter
get
of time.
sparked. Volatility
Yeah,
gets sparked, yeah.
yeah. I also want to talk later a little bit about the whole Middle East thing going on and to give my take on it because I think it's far from over, right?
Yeah.
Obviously, Iran plays its cards, and so we have some developments there that as far as I have seen it and read over the weekend, is at some points not a possible situation neither for the US nor for the Iran, right? So we might talk about this. And this is basically what Steve said. You need to be prepared for the unexpected news coming out at every second, especially before the US opens. And you know, there are some players in the markets who really want to push up the market with all force. So therefore, be aware of that. Okay, I think for this week, Steve, the big focus. Actually, could you please bring on Forex Factory and then turn on the um, weekly overview? It's on the left. If you click on today and then this week, down below, there's a button. This week, yeah. Apply settings. Okay, not sure what's happening there,
Yeah, not sure.
but yeah, guys. But basically, this week all eyes are on the CPI number on Wednesday. This is the big one to watch out for, right? Um, we had the NFP on Friday, so and now all eyes on inflation,
Yeah, there we go.
and
Yeah. Yeah.
yeah, and that's a number that everyone is watching for, right? The Fed, everyone. Trump, the whole White House, the whole world is watching for. So, in my personal opinion, this Wednesday will be as important or almost as important as NFP on last Friday. So therefore, prepare for some wild action beforehand and also afterwards, depending on the number coming in. And if the number comes in, well, what's the expectation? CPI, three
For which
point.
one? Year over year, month over month?
Yeah, year to year, three point
Uh,
four, right? Forecast.
Forecast 2.5, previous 2.6.
Yeah, core CPI and then the normal CPI 3.4. Yeah, so guys, if the number comes in super hot, then obviously it will be a hawkish stance, right? For the for the Fed, and then the markets will not like it. But if it comes down, gets like drops 2.4, 2.3, then you get your bullish case.
Yeah, yeah, no kidding.
And that's basically what the market is watching for, right?
Yeah.
And
But hey guys,
yeah,
let me just get into today on lighter days like today, it's always important to talk about as well. Yeah, Rosandro, yeah, welcome. Any questions, let us know, you guys. Because remember, end of the day, we're prop traders, you guys, okay? We're intraday. We're always trying to identify, key economic events. If there are none, how to prepare ourselves, okay? Support resistance levels that I'll also bring up later on um, before the bell, which is, this is what we talk about, you guys, okay? Before the bell, create awareness. Once New York hits, we shift gears a little bit, look at market ranking. Henry looks at the whole macro outlook on different assets. They're all affecting indices. And you guys can put on your chart as a watch list and also how to set alerts and be more, be more tentative of what's actually moving markets and what's actually flowing in and out of markets, you guys. Because remember, markets move fast. They're not moving into cash. They're rotating into other assets. So it's important always to make note of what's really happening in your trading. So yeah, today, you guys, the news is light. No major data releases. As Henry said, they're coming on later this week, which will be important. Trump will probably make some announcements, especially some Fed speakers. But we do have one FOMC Fed speaker coming on later today, Beth Hammock. She's Cleveland Fed speaker, voting member in favor of a rate hike, and citing some stubborn inflation remarks. So like if you guys are still holding some trades, closing in until the end of the day, just be aware we got the FOMC speaker coming later on. So put that on your charts. If you like trading into power hour, I myself always wait for the early auction to play out, and then I set my trades. But for the ending auction, closing of New York, I stay away because I never found an edge there, and just doesn't line up with the time in my life as well. So that's always it's the thing with trading, you guys. You have to align with your personal life, with the time of your setups as well, because if I'm maybe my edge could play out during the Asian London session, but where I am in the world, you guys, I'm asleep. And if I'm waking up that early in the morning, that's taking away from the quality of my life. So that's also important as well, you guys, when you're looking at trades. And just in quiet sessions like this.
yeah, but
You
I
can
just
also
want to add one. Sorry, I just want to add one thing. And guys, you don't need to trade all day long. That's also the biggest misconception that people have. You don't need to trade the London session, the US session, the pre-market session, the after like market close, whatever. Like you don't need to trade every single session. It's really there are patterns in every session that are coming back. Test them. Most importantly, make them align with your lifestyle, with your current situation. Do you have a full-time job, 9 to 5? Do you have a night shift? Do you have kids? Do you have parents you need to take care of? Thousand different scenarios, right? Do you have some sport activities in the same time every day? Those are the things that you need to consider. And trading will only work if it aligns with your private life. So either you're so committed to trading, so you're basically saying like, all right, I do trading, nothing else, but I cannot recommend it. It's not healthy over the long term. You can do it for a couple of months, maybe a year or two, but not for the long haul. It will burn you out. you need the balance, right? So you need to consider trading is a job. By the end of the day, it's a profession as any other profession there out there. It takes its time to learn. It's a craft. It has the same mechanics. You need to wake up in the same time. You need to do the same things. And you need to have the same discipline, the same routine as you would have with any other profession out there if you want to be successful in this profession. And this is, I think, also the biggest thing that people don't get. They're like, yeah, I'm sick and tired of my job. I don't want to have a job. I am trade. Like, yeah, but
Yeah, you no
trading,
chance. Yeah,
trading is a
no,
job. And then I can tell you if you have this mindset, if you are really thinking like, yeah, I don't want to have a job. I don't want to work. I just want to play around. Then you will
yeah,
lose. I would bet always against everyone who has. There might be some super crazy outliers, but in my honest opinion, would be that they will not survive for too long, right? They might have a run up and might even grind their account up to super high amounts, but over the long haul, I mean, talking here about like 5, 10 years period of time, it will catch up to you. Bad habits always catch up to you if you don't prepare, if you don't do the post-market analysis, if you don't do journaling, if you don't do about your mindset, focus, all the things that Steve and I are talking about day in, day out here on this channel, guys. And therefore subscribe. It will just kill you out. I can tell you that.
yeah, yeah. 100% agree. Like for example, you guys, I always leave a gap for myself from the 10 a.m. open to about lunchtime, and maybe even like an hour after lunch. I 2 3 hours for my trading because that's always plays on my edge. But anything before, anything after, I'm always open for work. Always open to partner, which is why also I partnered with Bertie. You guys, I partnered with Henry. I'm doing this work not only to benefit myself, my mindset, to keep myself busy, but to help you guys, to create some education. This is why we're always open, you guys, because Henry and I, we have the experience. We've been in the game a long time. Not as long as Henry, of course. He's been in the game probably, the longest here, you guys. So, but that's the whole point of things. It's like you will never meet a trader that only trades unless he's actually at a professional physical desk there for like 8 to 10 hours, trading, like for example, S&P Capital. But then again, when it comes to like the virtual life, no, there's no chance, you guys. Yeah, traders themselves, they're never trading all day. They do the prep. They're in and out for a few hours, and they have other things to work on in their life. So yeah. Anyways, let's. Hopefully that helps you guys. Drop a like and subscribe. Any questions, let us know. Currently, right now, let's just quickly look into Nasdaq before Henry gets into the whole macro play. These are the pivots I left on from last week, and look how nicely we tagged it and we're getting rejected. This is why I always bring these levels up, you guys, because they work almost every single time. It's no magic. And what happened here? It just came up and retested the New York Open from Wednesday. Sure, it was the pre-market volume, London volume with low liquidity. However, this is why I bring these levels up, because they act as magnets. So you can say two things. You can bring on your charts by using candlesticks that act as magnets. Is one, New York Open. Two, gaps in the market. For example, we had a big gap here on Wednesday, never got filled. What do? We tapped into it during Thursday's run up and got rejected. I'm not saying we're going to get rejected every time. However, you can almost be guaranteed a reaction, either a huge surge through that gap with increasing volume or a rejection. It's not too often that you get consolidation in these areas because there's a large amount of orders being placed for a reason. So yeah, this is the two things I always bring up, you guys. New York Open from previous levels and gaps, because you're always guaranteed a reaction. So yeah, I will edit these out for now, but this is just example why I bring this up, you guys, because these levels, they work every time. They're not magic. It's just how market moves. And what I'm going to just quickly outline, because so far for now, Nasdaq is back to break even, you guys, for today's session. So not much going on. It's also reflecting the light calendar, so it's good. Just a wait and see mode. Just keep your financial juice, news squawk, whatever you guys use. See if any new data comes on. Any Fed speakers, Trump, of course. True Social is always making comments since the peace deal. What's going on with the peace deal? Sorry, the negotiation deal, Henry. Any major changes, or we're still flip flopping back and forth?
Yeah, I mean, they actually made a kind of big pact between Pakistan, Turkey, and is it UAE? Um, Not sure. I think it's
Yeah, I
UAE.
think so. Yeah.
And what it basically means, they're saying, all right, we have the defense pact. So if ones get attacked, they're all involved. And what they're trying to do with it, they're trying to reduce the amount of possibilities for Iran to attack its neighbors, right? And so now the question would remain, all right, does Iran accept this defense pact because it's so obvious right in the face what they're trying to achieve with that, right? Or will ignore, or will Iran ignore it and just keep on going as it does? So this is one of the biggest like actual things that happened over the weekend. And guys, again, like everything you read in the news, it's nothing has been resolved yet. Like the big question is still in the room. Will US accept that the Strait of Hormuz is now in the hands of Oman and Iran? Will they accept it? Will they be okay with Iran and Oman charging a fee? And there might be not, it might not be an official service fee. They might hide it in a kind of an independent fund for, I don't know, like security and cleaning services or whatsoever. But there will be definitely a fee and one way or the other. And the question is how, like, it needs to be written down, right, and accepted by the US. And as long as this part is not done yet, as nothing is resolved for me. So this is actually like will be the reason for me when I will say, all right, now the situation is resolved. This will be like basically written down on paper, accepted by the
Yeah.
US. It's like the big.
Henry wants the pen and paper. Yeah.
I want, yeah. I mean, it's if you're in the business long enough,
Yeah.
you don't trust anyone and nobody in terms of what they're saying. So
Yeah.
you want to have, especially those kind of big deals written down on paper. And
But it's interesting once you're going to bring up the ES and even the NQ charts on the long term, the charts are saying something different, Henry. They are saying, because but that's what the markets do, guys. They like to overreact and then wait for confirmation, unless they have some, they got some inside information we don't know, you guys, and they're reacting maybe a lot earlier than the retail mind knows, because we always get the information last. Usually, like the saying goes, um, like how does
yeah,
it
I
go?
mean,
Where,
Steve,
like
if you would
today's
not be
you
so, you just need to pay it 100 grand a month to
for true
get
social.
to get to get half a second faster information from Truth Social, and
Yeah.
then you're in a circle, you know.
I know. But ever since I heard that saying, Henry, where today's news was yesterday's move, but that's usually how it happens, That's why we always like to watch markets. So if we're seeing markets are bullish, then we already know what headline's going to come in a few weeks, Henry. So
Yeah, but
maybe
that's
I don't
actually
need true
yeah, but
social.
this is gonna the next. This is like the next upgrade, right? So half a second and Truth Social, but if you pay a mil or 10 mil per month, then you get upgraded to the inner circle mastermind group where you get the news one day before.
Yeah.
So it's like there's a tier process, right?
Yeah, of course.
Yeah, no, guys,
Like,
we're just joking around.
always joking. Good morning, double
Uh,
seven. Hopefully you
oh,
are
sorry.
ready for the opportunity, my friend. Always measure your risk properly. I mean, yeah, like guys, if you really need the news, if you really need some sort of like impulse, then go over to the prop firm communities, you guys. Because Henry, as you can see, there's always news going on in the prop firm world. It's in, and what does Purdy do? Purdy is relaxed. We have the CEO come on as well. He did a live stream, answered any questions, you guys. Always knows the path forward. It's nice and easy. Know the goals. Of course, there have to be some work getting done to strengthen some accounts, but the new updates are coming soon as always. Henry can always get into that as well. But you guys, it's it's a wild time out there with prop firms. Always make sure you pick a firm that has been in the game for a long time. That's all we can say. Do your due diligence. Make sure they pay out. Make sure they have the rules that line up with your trading as well, because a lot of times people trade prop firms. They have some finicky rules that doesn't match up if they like to trade news, don't like to trade news. Here, of course, here at Perdia, we allow you to trade news. There's no 2 minute, 1 minute rule, inside and out. If you're finding the opportunity, even if it's not a major, uh, red calendar, if it could be jolts or like other, like Michigan, but of course we have CPI happening this Wednesday. All we can say if it's CPI or NFP, something big, maybe stay away from it for a few minutes. But then again, yeah, you know, Pretty doesn't have that rule, you guys, so you can always trade with ease. That's what I
Yeah.
want to say.
Yeah, I just want to add one thing that that has always been our goal, right? To create accounts, to create a path for traders that is as close as possible to your own private brokerage account. And
Yeah.
in the same time, that enables you to get in for a reasonable price with some clear rules, clear path, right? So you know what you're up to. I'm always repeating myself, guys. We never try to hide anything. If you find something that is not clear on our end in the knowledge center FAQs, please let us know, so we can correct it. We're also not perfect. Sometimes something might slip through, right? And considering all the complexity in the space, but yeah, it's always been our goal to be upfront, to be honest, and to be transparent. Right, guys. I just want to take a couple of minutes because not so much is going on right now. So let's dive into last Friday. So when Steve and I had our NFP special, more or less, we have been talking about this is the NFP open, right? So the news came out. We had the initial impulse. This is like NFP low, NFP high from this initial move, like initial couple of minutes, how I like to say it. And then some people argue like, no, you need to count the first half an hour in or whatever. Then it would be sitting here on top. Like I can also make it a different color, just for purposes. And again, there's no right or wrong. It's just something you need to do for yourself, some back testing, and just like doing it over and over again, so you don't mix up different styles and things. All right. So and then let's make it like this. Market progressed, slowly grinding up, slowly grinding up. Then we were approaching US Open, and guys, like this should not have happened. The market should not have. If it would be like a super strong bullish trend, then the markets should not have broken down this support area here. It should have been bounced upon and continued to the upside, but we didn't. So we broke through. And what that was the first indication, all right, it's either be a range day or it's going to be a reverse day to the bearish side, right? We never know which way it goes, but it gives you an indication that the bullish momentum has been not strong enough. And all the traders and some like intraday traders, scalpers, took their profits from the move up, right? So this is basically what the market has been telling you here. Then US Open, okay, initial reaction, let's see. Bam, we're not able to break through. Initial spike up, coming down back to the US Open, retesting the US Open. US Open is holding here. 1, 2, 3, 4, 5, 6 tries. It's like, guys, it's 1 minute candles, right? So don't confuse it, but it's like yeah, I mean, it's like if you're trading if you're trading intraday and yeah,
people are like, Henry, I thought you do the macro zoomed out and like the crazy chart. Yeah.
I can zoom in on the second chart. Yeah, no, yeah, still old habits, guys, sorry, but yeah, that's basically I'm trying because I know that most of you are scalping around, right, for 30, 20, 50 points and trading from small time frames, but this is how you need to think. You always need to think in zones and levels. And if you see after the US Open, this is basically your initial balance, right, from the market opening. So it cannot break. Extension coming down, cannot break, coming down, breaks through the open, breaks down, test, retest, accept it as a resistance zone, falls down. And you see those levels, guys. This is like what I'm saying every day, every other day. The story repeats itself over and over and over again, right? From zone, from level to level to level. It's just a matter of time. Which levels do you use, and how well are you trained on these levels to train with? This is all you need, right? You cannot trade this stuff blindly. You need to be proficient with it. You need to test it over and over again. And you see, and that's like for me, I'm calling it. It's like the North Star, right? It's basically you need some if this is your chart, you need an orientation inside the chart where you know, all right, if the market goes there, then this and this scenario might happen. If the market goes there, then this and this scenario might happen. If you're not a completely systematic trader with fixed entries and exits, that is basically, and you have no room for discretionary. But most of us are discretionary traders, right? So you cannot write down, like we don't write down algorithmic rules and follow them there to the point. So there's always some space for interpretation how you see things. But you cannot, in the same time, you need a kind of a guidance for your charts. And so, for example, Steve uses this as well, right? He uses his momentum, all right? News are coming out, that's his zone. US open, that's his level, right? US session high, US session low, those are his levels. And so what he does is he trains his eyes over and over and over on these levels. So it's pattern recognition, guys. It's like mastering a craft. He doesn't do, and if you like, just guys, just rewatch the last 1.5, 2 months of our stream, and you will see Steve uses and I will use the same patterns all over again. So it's not we don't overcomplicate things. We don't mix up one day RSI, other day ICT, other day volume profile, other day footprint analysis, other day Renko chart, range charts, Heiken Ashi charts, like all kind of MACD. And there's nothing wrong with using those tools. But what I'm saying is basically choose one and stick with it, right?
Yeah, that's it. Exactly it, Henry. And I just want to quickly say where once I simplified it, where, I set those alerts on the pivots because I knew those were important pivots in the past. Still neutral, whether long or short. I wait for, a large absorption, large orders to enter. And then I also pick out, okay, if this area will reject or will break, retest, and continue the trend, where are other areas where I would like to start taking profit? And if that risk reward makes sense, where it's a nice 1-to-1 or maybe a little better, like even like 1.2 to 1, 1.3 to 1. Very rare I get 1.5, even though Henry always tells me, Steve, try and increase your risk reward, but it's easier said than done. Maybe if I did trade the footprint and had a little better eye on market volume, but I like to keep it simple, you guys, and that's what worked for me. Where the trend comes in, it taps some pivot, I see the large volume, and if I look at which direction it's heading, in that area if it's heading to makes sense to me, then that's it. I put on the trade. That's how simple it is, Henry. And I just explained it to you guys in 30 seconds, and that's my whole strategy. And that's it. That's all you guys have to do. If you can explain your whole strategy to yourself in the mirror, or to your wife, husband, friend, whoever, in less than 30 seconds, then that's a good strategy. But if you overcomplicate it, you are, even feeling nervous to explain it, don't even know how to explain it, and then you time yourself 4 or 5 minutes later, you still haven't explained your strategy. That's it. Cut it loose, you guys. Cut it loose and get rid of it.
I knew a guy, and he was really special. He had a really special character, and he wanted to make a point and to prove to some newer guys that your entry does not matter as much as people would like to believe. And it's like exits, trade size, stuff like that. So what he did, he basically programmed, again, guys, no financial advice here, just telling you some backtesting stuff, education. So he programmed an algorithm that basically had 1 or 2 indicators on it, nothing fancy, like EMA or MACD whatsoever. And then he basically said, all right, 50-50 chance long or short. And that's all he made. But what he optimized for were the exits. Time of day, when this volatility came out, after the news, New York open, New York closes. He optimized for these things. And he was able, then he let it run like, I don't know, a couple of weeks or something. It was a profitable strategy. It was. And therefore I'm always repeating myself, right, with my pyramid, where I'm like, entries are just a small part of the whole equation, right? It's, but at the end of the day, there's so much more to it than just I guess we have US Open. Actually, I'm sorry.
Oh, Henry, we missed it. We always miss it.
Always missing the US Open.
Sorry, guys. Yeah, we have so much to talk about, but nothing. Even though we're only 20 seconds, 30 seconds in, it's actually very compressed. Not much going on, Henry. Very surprised.
Yeah. Let's zoom in. 5-second shot. All right, guys.
Does not want to move. Yeah. Just take it easy.
Let's take it easy, guys.
Yeah, holy. And we're still in the range. We're still in the range.
Yeah, no, guys, I'm just kidding. Let's zoom out a bit. 1 minute chart. It's okay now. Jokes aside.
It's very interesting because I actually looked into the whole market auction theory, especially in the opening market auction. And it's interesting because when I heard this interview with the Citadel trader, and he said their actual trader, the human traders, the only time they trade is during the opening auction, ending auction, and the trader asks, okay, but how long does the opening auction last? It could last from 30 seconds to 30 minutes. You just never know. And then after the opening auction, where they released all their actual trades with either their clients or the volume they needed to enter the market, it's all algorithmic afterwards. They said after in between the opening and the ending of the day, it's all algo driven, and there's no human intervention. Well, there's human management, but no human intervention because their algorithms are so efficient right now. So that's very interesting, you guys. So that's why I know a lot of traders, they ignore the first 15 to 30 minutes because that time, when it's funny, when Henry, when humans intervene, markets are actually very unpredictable because they're just offloading so much volume into the market. But after the algorithm comes in, things become more efficient, and you look at, okay, which direction the market's going, are they filling gaps or filling areas up or down, and all the way until close. That time could be a better time to trade because if it's algo driven, you could kind of get a sense of what the algorithm wants to do in the markets. Like, what do you think, Henry? And this is
Yeah,
what
I mean
this is
it's
an interview I saw from Citadel.
yeah, I mean it's like you need to adapt, right? So that's the thing. You need to adapt your game, and if you know the algos are coming in, and it gets harder and harder for you as a human, so the humans started to also to watch out for some edge, like some where's the edge for them, right? And guys, we don't like because the issue is we don't talk here about trading with micro or 10 micros or 10 e-minis. We're talking here about guys trading in hundreds and hundreds of thousands of contracts, right? So they need volatility, they need the size. And many years ago, like 15 years ago, if you watch some videos on YouTube, you can find some, and you see the dooms, the price ladders, and you see like 3,000 contracts on ES on both sides for each price. I mean, those days are long gone, right?
Yeah.
And option market absorbed a lot. Option market absorbed a lot of volume overall, and had a major shift. So therefore, people adapt. But this is like also a lesson in itself that even as a professional, you need to adapt. You need to change your style. You need to see what are the developments, right? And if you see that you're again, guys, it's actually a point for optimization and journaling. If you see that your edge is getting degraded, right, and you see like, all right, my setups don't change much, but I'm making less and less money, and then it's like, all right, why is it the case? Is it my execution? Do I get slippage? Do I get I don't know, worse? Do I get out of the market much worse as it used to be? So what's the point, right? And this is why you need journaling and proper tracking to analyze all those kind of things that make a difference. And so yeah, I agree with this guy. But again, it depends, right? If you're an institutional trader, you're getting completely differently compensated than like a hedge fund guy or an prop trader who has still more of a freedom in terms of direction and like placing directional bets. It's another it's another game. It's another topic by itself. So yeah, I mean, for me, the most important thing for me is like those guys, Trillium, Citadel, SMB. It's not that they're making money. It's the most interesting thing is that they are evolving, right? They are not just ignoring and trading, doing the same thing over and over again, but they are actually like adjusting, moving forward. Like, all right, we need to use this, we need to use AI, we need to use how can we leverage it, right?
Oh, they've been using AI for a long time, long time, long time. And it's funny, everyone's because it's a big push. It's media. You guys, think about it. Ever since you're able to type into Google a few questions, AI already existed back then. So that's why just because it's making the news front for the last 2 to 3 years, it's doesn't mean it's only just been happening right now. It's been happening for over a decade, you guys.
I mean,
It's
it's
just
just I think the people have the misconception like that AI basically found its way into the retailers, right? to the end consum like to the consumer. But for the big players, the big money, they have been using AI forever, like Python and all the big data models and stuff like that. I can remember some stories from I don't know how many years ago it is when Twitter was quite new, and they started to some hedge funds started to crawl through the Twitter feed for some news, and in order to get like the feeling about some shows, the feeling about how is the customer sentiment, right? And so it was already back in the days, already like 10 years ago or something. So therefore, it has been around forever. And I think this is, the biggest misconception that people have.
Yeah. Oh, and Henry, guess who's the leader of today? I'm looking at the Meg 8. Your good
Yeah, show
friend.
me.
No, your good friend.
Okay, let's go. Okay, guys.
Sorry, I just want to quickly show. Guess which chart this is? SpaceX. The leader today.
Yeah, I want to talk about it. It's
Yeah,
like
yeah.
plus 12% or
Sorry.
something.
I just want to quickly showcase this. Everything's a bit down today, you guys. Flat and slightly in the red. But the leader, you can see the Meg 7, Meg 8 is SpaceX, gapping towards the upside. So I just found that very interesting.
Yeah, there was actually a fun story. So apparently on last Thursday, the positioning of retail has been the strongest in terms of net shorts.
Oh,
so and if whole retail is positioned net short, what
you
do
know
you
what
do
that
with
means?
them?
Yeah.
Yeah, so you squeeze them, right?
Squeeze
So
them all.
it's always the same. It's really I'm sorry to say, guys, but it's always the same. If you have been for the game, it's again. Sometimes I'm really thinking like it's a shame that we don't have time to trade, because sometimes I'm reading it, I'm like, damn it. So it was actually after our show on Friday.
Yeah.
I read it. I was like, okay, more times than not, it will probably squeeze, and just squeeze them like 15.8% up, right?
Because
Almost
it's
16%.
legal for them to see all the data as well, right? It's legal for them to see everyone's margin account, everyone's leverage, what their liquidation level is. They calculate everything. They do the math within minutes, and they're like, "Yeah, we're going to this level because we're going to make as people empty out their margin accounts, we make money. So we squeeze them out." And happens the same on Nasdaq and S&P.
Yeah, it's I don't know. I'm still not fine with it.
Yeah,
I think in my
it's not
personal
fair.
opinion,
Yeah.
my personal opinion that pushing the game up a little bit too high for my
Yeah.
personal take. But who am I to judge, right? It's the way it is. So yeah, but it's something I want to talk about. So we basically squeezed through our gap level, right? So we not only closed the gap, but we also like closed above the gap. And we said, all right, if we close the gap, it's going to be our new support area. So for the time being, as long as it holds, that's our new support area. And so yeah, as long as it's not broken, it's a long for me, right?
And yeah, we hit the 50% on the measured move,
Let's see.
or like maybe slightly overextended, close to the 618 if you guys are looking at fibs, if there are any fib traders around here. But yeah, I think we surpassed the 50%.
Yeah, we surpassed 50 and
I think
like
little rebound.
60% or something, plus minus.
Yeah, a little short.
But yeah,
squeeze right
crazy
now.
move. And again, the story repeats itself, right? People are jumping, everyone is on board, and then at one point it just squeezes everyone on. And what do you want to do about it? Nothing.
Exactly, yeah. Your opinion won't matter. You guys can
Your
post
opinion
on X, you can post on YouTube. Oh, should not be legal, but you know what, you guys, it's legal. So there's nothing you can do. So just move on,
Yeah. Yeah, Apple got downgraded from a big firm, and so therefore some short momentum there. And we talked about the range, right? We said as long as the gap range is holding and is not being pushed through, it's more a short play than it's a bull play, and it's basically doing. But let's have a big picture view on NQ. So what is happening on NQ? What would actually give me a proper signal for going short? I think it's this low here, this intermediate higher low. If we break below, and we also break below this trend line, so this is actually like the level I'm watching. Let's call it 29,200 and 29,00. So like it's a range, I would say. 29 to 100 and 2900. Yeah. So that's basically my range that I would watch for. And for the time being, look short. Might be a range, might be a bullish continuation, right? If you want to say, okay, this is the upside movement, so would kind of make sense for it to correct, to go down, like maybe to here, maybe to the range, and then bounce. So guys, it's tricky. It's a range play. Don't expect the market to move like 900 points or 700 points like it did here and the breakout candles, and have a more realistic take profit expectations, right? Because more time than not, you will get a specific amount of points out of it, and those runners that you see on some X tweets, 800 point winners, 1000 point winners, 500 points winners, it's outliers, and then people just love to brag about it, right? But it's not your daily business that you need in order to get consistent profitable. And so don't expect these. Go for the base hits. It's a base hit after base hit after base hit. Collect them, add them up. This is how you grow your account. How you're going live. How you can scale the account up. And so yeah, if we break above, obviously, continuation to the long side. But for the time being, for me, it's a range play, right? Um, at least in my opinion. ES actually looks more bullish, I have to say, because also that we're sitting around on all-time highs here, right? So ES is definitely much stronger for me than NQ. Dow
Yeah, Dow broke out as well. Yeah.
also bullish, sitting also at all its all-time highs. Actually, we're sitting right in the support area, so it's also rather bullish. Doesn't mean that we're breaking. If we break below, then we might see actually quite some selling, because I think many people have their stops here. And just saying,
Yeah. Yeah, I
Russell's
remember you guys too. Yeah, like S&P, Dow has more institutional flow and like stability stocks, stability assets, where Nasdaq is just pure AI and tech. So there's a reason why Nasdaq is just lagging behind. Sorry, I just want to say.
no worries, no worries. And yeah, so Russell sitting right at its all-time highs, right? So we were not able to pass through, but also looks bullish. So guys, if I would have to take a guess, everything looks bullish to me. So be really careful with your shorts, and have always a stop in place on both sides, to the long and to the short side, because if you start to squeeze higher, might be an explosive move up, but at the same time, if the market drops down, then everyone on the long side needs to liquidate, and then we might also see a pop to the, or like a drop to the downside. Oh, that's interesting. Yeah, we didn't have time on Friday to talk about gold much, but look at this.
Broke out, yeah.
Broke out of our and look how perfectly we are aligning with our levels, right? From level to level, guys. So if you can go, guys, you can go in time in beginning of June, and you can see how we basically in real time drew along as gold progressed here. And you see it all comes back. We had our level 44.10, we bounced from it, we broke to 42.700, right? So we could like consolidate it here above. And for the time being, for me personally, we're sitting within this range. If we break above, obviously it's going to be a long. Then I would say that's a long. But for the time being, it's a range play for me, right? Sitting here between 44.10 and 42.70. So just be aware of this scenario. Silver is about to. Oh, it looks like it wants to break out.
Yeah, but it's getting the double test as well, it seems like. Yeah, that's similar to gold, you guys. You can also use gold and silver as confluences, since they react together, which is the strongest, which is the weakest. Yeah, but just be aware if you're trading intraday gold or silver that they're both retesting an important level on a longer time frame.
And many of you are saying like, yeah, hi, why do I need it? Why do I need the big picture game and all of this? And guys, the same thing I'm doing here on the daily chart. You can do on the weekly chart, you can do on the monthly chart for investing, for your swing trading. You can do it on an hourly chart, you can do it on a 55-minute chart. Structure, it's the same. It's really about understanding how the market moves from level to level, what the level means, to see, to count how many touches that it had. Is it was this level accepted as a support and resistance level, and then just to see with time how markets behave to it, how the markets move around it. Oh yeah, so that's interesting. Light crude, uh, our 80s level. So basically, it looks bullish, right? At least for me, it looks bullish. Looks that we want to break out. And again, guys, if you get some news that are super bullish, don't fight the trend. But if you get some news, and we are sitting here at this resistance level, and the news are bearish, and the market action aligns with the news, then it's a bearish case, right? And then also don't fight don't fight the bears, just go along. And that's the whole reason of our show. We try to show you both sides, so you're more flexible in your thinking and flexible in your. We have a trend line here that we're currently accepting. We have also the gap close here. So yeah, if we break above, then most likely than not, we're gonna see some upside momentum. Otherwise, we might test it and then going down. Let's see what happens. VIX completely compressed. So suppressed. Triple Qs. I mean, to be honest, it looks everything like all the indices are looking more bullish than bearish to me at this point.
So we can all expect something in the fall coming up soon.
Yeah, probably.
As
I
like
mean,
the
so like
major
always,
headline, yeah.
it's always like,
Ceasefire is officially over. Who knows, you guys? It's not
yeah.
financial advice, but
So,
the markets never lie. So the
yeah, but
charts
then,
never lie.
yeah, but then again, right? Don't trade it blindly, even though you have an opinion, even though you think like, all right, it looks bullish, and it goes the same as for me. If I would trade and I would see, all right, it looks bullish, but the price goes down, you cannot just trying to catch the low, right? You need to see some kind of confirmation because you don't know which level will be accepted by liquidity. Uh, yeah, so we've been talking about last week, right? Retest of the trend line, and as long as the bluish area here is holding, it's a bearish range kind of scenario. But and that's actually a big but, if we manage to break above the green light here, the the blue area, and we go higher, then it will also provide a lot of liquidity to NQ, because then it's another game for the semiconductors, right? So guys, be aware of this. This is the only reason why we bring this up, because Cosby does matters for the semiconductors, for the AI sector. So if this goes up again, it might give another push to NQ. But if it falls down again, then it might drag down NQ with it.
Yeah, it could
So
be a leading
therefore,
indicator right there. Yeah, so it's interesting how it's just stuck in the mud. While
yeah,
indices rise, it's stuck. So yeah, really keep that on. Set your alerts on that index. This is why I always set alerts, because I can't be looking at 20 charts at the same time, especially on the ratios. So that's the one thing I could advise on you guys. Every broker, every platform has that tool. Set an alert and just let it play out.
yeah. I mean, you can even use. Maybe I need to make a video about this. You can even use some native functionalities from TradingView to set these things up, and then you basically just set it up once every couple of days for all the levels you have, and so you don't need to automatically update it daily. Yeah, I would say a mixed picture on our Mac 7, Mac 8, whatever it is, Mac 10
Yeah.
that we have from like Microsoft, not new all-time highs, but on its way to new all-time highs.
Yeah. A lot of
While
it post earnings too.
yeah, Google gave completely everything back post earnings. Meta consolidating. Amazon actually quite bullish for the time being. Tesla
Yeah.
nothing.
Yeah, no surprise there. Yeah.
No
I don't know how much
surprise
you
there.
order off Amazon, Henry, but Every time with my wife, I'm like, God, rather I want to support the local business. Don't buy too much from Amazon, but man, it's just so convenient because you go into the store and you think about like, but there's no reviews on it. I don't know how good it is. So I go on Amazon, it has the reviews. That it's so hard. Jeff Bezos, man, the guy's a genius. Honestly, he truly is. And it's almost the same product you're buying off Amazon than in the store, but you would rather support the local business, so it's tough. It's a tough transaction. Yeah, sorry guys, I just have to go
No
on my
worries.
rant.
Yeah, guys. A quick view on the yields consolidating. So we need. Oh, that's actually interesting. 10-year consolidating, but it looks bullish actually. 30-year as well. So yeah, we just need to have an eye on them, guys. If it pops up out of its zone here to 4.25% and higher, then it might have an impact on NQ again. So you see, it's all connected. It's all interconnected, and it might not matter for the next couple of minutes, but it matters in the overall context. And if you see that, let's say yields are breaking completely new highs, and it's in the headlines, then you can be almost sure that it will have that it will affect NQ to a certain point. And then depending on the news impact, that gives you an indication of the volatility that you can expect for today. And that's what we're trying to teach you here, guys, is basically to understand the volatility expectation for the day, and also being prepared in your mind for both paths, for the long and the short, and not being just blind by the dipper who just pushes in every time and Q goes 0.5% down and buy blind, because that's not trading, guys. It's just hoping. It's like we used to call it hopium.
Hopium, yeah. No, it's still there. It's still there, Henry. Hopium will always be there. But yeah, then again, you guys, like Henry says, and I said as well, okay, it is tough to set up all the watch lists, all the charts at the same time, you guys. This is why it's important. Never trade alone. It's not hard. Pick one or two partners. They don't have to be trading the same assets, but at least have the same goals as yourself in the props firm space. To trade lightly, get to that payout. Never rush the process, you guys. This is why you look at all the professional trading desks. They all have their partners around. They have their manager. They have their risk team. Okay, sure, yes, that's a professional setting. They have a team around them. This is why exactly you guys should try and just replicate that, especially when in the broader market on calendar days like today, where it's very light. There's not too much awareness to be focused on, but the headlines can come in at any time. That's why it's good to just have a little tap on the shoulder, small community around you guys. Okay, just to be aware of what's happening. Not so much on flipping strategies, more so just know what's going on in the market. Talk to someone, whether it's live into a trade, on your live journaling or post, because there's nothing stronger than matching up with the actual human being and talking about your risk management on prop firms, because yeah, anyone can just write it down, but how strong would that actually become into your mind, you guys, compared to actually speaking to someone about it. It's not hard, you guys. Find that one or two partners, find a small community. That's all we're saying. Have a trading plan, have a checklist, and just create a professional setting around it with people you trust. You don't have to be sharing P&Ls, you don't have to be sharing profits, just at least your plan, when you're locking yourself out, how many trades you put on, and just move on to the next day, you guys. Or start talking about what your goals are. You met your goal, and just what your plan is for the next day. To be aware, next day, like we said, we have CPI coming on midweek. There are a lot of news traders, so they step away maybe because it's Monday, because it's lighter on the news front. As you can see, you guys, we are stuck in a range. I marked out the New York open that got rejected a few times from previous days, so this is an important pivot right here, 29,976. Mark this out. This is New York. Boom. Because yeah, we have no headline risk, and also we are bouncing from the New York Open from Friday here, 29,676. New York as well, but headline risk can come in any time, so I'm always updating my market live ranking. Before, I had ES as the strongest, but things are starting to shift right now. So yeah, we are light on the news front, in a range. Let's quickly look at the ratio, you guys, see if there's any major spread going on between assets before we close for today. Yeah, we just have a few minutes left, and what I like to see is If we're comparing Nasdaq to all other indices, I want the trend to be clear, but it's not so clear here. I don't know. Like Nasdaq is showing, yeah, it's showing it's much weaker, much weaker than ES. Back into balance from the open of today on Dow Jones, and back into the balance of Russell 2000. So just because, yeah, we are much weaker than ES, I'll just put Nasdaq on last place because it likes to be the most aggressive, and because we are, yeah, trending on the downside. Yeah, not much going on, you guys. It's, we're in a range. NQ the weakest. I can say Dow Jones is first place for now. We'll bring up some levels quickly there. But yeah, this is all we're seeing. Let's go into Dow Jones quickly just to see what's going on. And yeah, Dow Jones is in a range as well. So nothing going on, you guys. No one's breaking out. No one's making big gaps in the market right now. That's another thing what I like to see is I'm not so much entering in gaps, but a lot of times I like to take profit in gaps because I know a reaction is almost guaranteed in those areas, because there's, whether the gap came from pre-market or the gap came from a previous day, there's a reason why those buyers and sellers were overbidding the market in that area, because they're quickly trying to get out with large volume, and they're in that time and place there wasn't enough on the other side to back up those large orders, which is why there's gaps in the markets, you guys. And eventually, markets, whether it's the gap up or gap down, the buys and sells are usually met either in the options market, the dark pool market, or the actual stock market. But in that moment in time when those large orders come into play, that's why the gaps are created. So that's, for me, it's good enough to take profit or start trailing on that area. So that's in a way my strategy right there, Henry. But to enter on the gap, no chance, because if you're entering on a gap, there's too much volatility. Too much volatility. The up and downside could stop you out. That's why, for me, I like to stay away from those areas when I'm actually entering. But when I'm starting to take profit and I was like, you know what, this is enough for me, that's just the perfect time. And when I start protecting my accounts and also putting it back into break even, because this is what the game is all about, you guys. It's survival, it's scaling, it's rotating. Maybe we should create a headline on that, Henry. Scaling, rotating, and surviving. That's what the prop firm game is all about. And yeah, like, this is what we're seeing for today, you guys. Kind of delete this right now, it's a little messy.
No, but again, right? That's the thing, guys. There's no right or wrong. Steve has basically found his path, his way, how he loves to trade, what he knows, what works for him, and he does it over and over again.
Yeah.
And this is why what we are preaching here all day long is basically find your own style. Don't, and that's why we have this risk disclaimer that we repeat ourselves. Never follow blindly anyone, because you don't know their risk appetite, you don't know their bankroll, you don't know their drawdown sensitivity, you don't know their overall life situation. Like, those are the factors nobody's talking about, right? And for someone like most of you need to save up to buy these accounts, 50, 100K accounts, but there might be some people who are just gambling them away because they don't care, right? And so never compare yourself. Make sure that you don't over leverage. Always have a protection in place. And yeah, size down if volatility is high. And for the long run, it doesn't matter how much money you make or many points you make every individual day. It's all about the long-term consistency, right?
Yeah.
How profitable are you month by month, week by week, and not like just watching at the daily levels and the
exactly,
daily spikes you're enjoying. So yeah, all right, perfect. Guys, everyone,
Thank you,
thanks
Henry.
for tuning in. Subscribe, let our like and a comment down below. Check out Podia's accounts. Use code premarket to get 25% off. We also currently actually have some amazing discounts on the evaluation accounts, so you can also try out these, give it a try. And yeah, tune in, turn on the notifications, because we're not so often online, at least not yet. Yeah, guys, this week there will be no more streams, so tune in, stay tuned. Next stream next Monday, 9 a.m. Eastern time. Steve, thank you for your time as always, and everyone have a good week, successful week, stay safe, and see you soon.
Yeah, thank you, everyone. Protect those accounts. Always have that, DLL. awareness and a mental DLL as well, you guys. When it's time to walk away and reset. So that's all we can say. So
Yeah,
yeah,
that's
any questions, let us know, you guys.
yeah. And actually, just one comment here at this point, because many people are thinking like, oh, DLL, it's a bad thing, but DLL is actually designed to help you. This is if you would trade professionally or if you would trade your own big account, you would always work with a DLL, and this is like actually gives you a protection against yourself, so you don't.
Yeah.
You're basically protected from a tilt. You're protected from some bad mistakes happening on the technical side. Back in the day when I have started, I would have wished I would have had, as a retail trader, those kind of protection and tools that people have right now. But yeah, so guys, sometimes there's a reason for specific features inside the accounts, and DLL is one of them. It's to protect you, not to yeah, yeah, to
Yeah.
reduce
And
your
also
opportunities,
mental
I
and
would say.
mental DLL as well.
Yeah. All right, everyone. Have a good week. See you soon, and bye bye.
Okay, thanks everyone.